they don't like to take the whole turnover cover because they think that this transaction is safe for me, you know, so I don't want to take the insurance cover for that. While the insurance company like to have the whole turnover because it can reduce the price.
Correct. Diversification of risk.
Exactly, yes. And then the very common problem which there's an argument between the insurance and the exporter are about the price. They expect that the price can be as low as possible, while we cannot do so because we have to pay the reinsurance coverage as well. That's one thing. So that needs to be addressed, especially on the waiting period by ICIEC. If ICIEC can do that, let's say, can make it special arrangements that the claim should be settled much earlier than the usual practices, I guess this is one of the strong points for ICIEC to do so. Besides that, my proposal to ICIEC that they should be having the full branch presence in Indonesia to capture the huge market in Indonesia, especially when we say that in the near future it's going to be effective the MIA or the Asian Economic Corporations. Right. So this is the thing that should be addressed, should be responded by ICIEC as a whole. Even though we know that the behavior of the exporter in any countries is different from one to another. In my perspective, that Indonesian exporters just like to do business or export to those partners who has been long relationship with them. It is very common here that exporter usually have 20 years, 30 years relationship with the buyers. This is they don't want to go to the new market. Right. This is the things that I think by implementing the trade credit insurance in Indonesia, and then we have to socialize this system to exporter, to the business people, to everybody, that there is a protection from insurance that can be enable Indonesia to boost the export.
Thank you. Thank you. We have less than 5 minutes to go before we complete our discussion. So there's still one important matter that I'd like to throw open to all of you, and that is what are the issues connected with the regulatory framework that affects the way trade credit insurance business is done? And I'm sure there are different perspectives from different points of view, so I'd like to have several of you perhaps deal with this question, starting with Mark. How do you, are you in any way affected at all being a broker, or how do you see your fellow insurers having to grapple with the increasing amount of compliance and regulatory issues that confront the insurance industry?
Yeah, I mean, credit insurance is similar to any general insurance. Typically, it is a regulated market. So I guess in terms of certain countries, there will always be regulations in place where you actually would need a locally issued policy. For example, in Indonesia, you probably only have like 5 to 6 entities that have the license to actually issue credit insurance policies. What it means is that from that regulatory perspective, where you may not have frameworks in place where entities like global insurers like ACE or maybe Zurich, where they are not able to actually set up a branch office in Indonesia, it means that it limits the access for insureds in Indonesia to access some global markets. Of course, you know, with the framework agreement between ICIEC, it means that as a multilateral, they can actually issue policies directly to Indonesian insureds. So in that sense, you do have some framework where it allows you to access international markets. So one of the things to actually think about is that for international insurers in Asia, most of them are actually based in Singapore for credit insurance. You have about 24 markets. A lot of these markets actually have to form partnership agreements with insurers in Indonesia. And I think that regulatory framework, if it's quite easy to access, it would mean that actually Indonesian clients would have a good pool of international underwriters that can actually provide coverage through local insurers and partnership in Indonesia. So I think, regulation frameworks actually do play a big part in terms of encouraging, access to these markets.
Thank you for that, Pamark. Since you mentioned about business in Indonesia, I think it's natural that I should now go to Pak Badruzaman and ask whether he has any thoughts about how he grapples with regulatory matters concerning his industry.
Thank you. This is interesting what Mark mentioned, that function of local insurance. We are in Asuransi ASE now doing what Mark mentioned. We are trying to do an agreement with a foreign insurance or foreign ECA. And then we are doing a local partner that explain or give confidence to the foreign reinsurance or insurance, and not just only to make confidence, but also to cover the risk. That all the local business, all the local regulation, we're trying to explain and how, what, and so on. And so our partner very understand with the local regulation, with the local law, and so on. So they are confident to give a protection and financing. This is Mark's mention. Secondly, about the capacity for the insurance also. If we're talking about the capacity in insurance, maybe it's very different with the banking, Pak Heri. Actually, in insurance, I'm still confident that the capacity is very huge, very big. But the problem is, if we're talking to the banks, still there is a different perception. Because the bank, actually a central bank, still not see that the coverage from insurance is the main collateral. There is a regulation that must be other collateral. That's the problem. So also, although in insurance the capacity is very high, but to apply in financing is not easy. It will be difficult. It's different. Actually, the capacity is very huge. And then I also interesting in Pak Savriel mentioned about the waiting period. I'm interested in an agreement with the ICIEC and also ITFC. We will signing on the last day in 19 with ICIEC. It's against the agreement, and also with ITFC as financing. We want to avoid the negotiate about the waiting period. Right. So we're trying doing protection as they issue the policy, but the reinsurance is coming from ICIEC, and the financing is coming from ITFC. So there is a discussion about the waiting period, because ITFC and ICIEC is already understand together. So after these runnings, and maybe Pak Heri also have a relation with the ITFC, for one buyers, ITFC maybe can doing until $20 million. Can we imagine if one exporter, Pak Anas, have supposed to be 10 buyers? It means $200 million for one exporter. Right. It's a huge amount for Indonesia. So it depends how to package. And how to mitigate, and how arrangement all the party. And after runnings with the ICIEC, so it's supposed to be, when in the ITFC, it's can running with the local bank, or it's can running with other insurance, foreign insurance or other ECA. That's the main point of how we relation between ECA or insurance and multilateral company. Thank you.
Thank you, Pak Badru. We've run out of time, but I'd like to have Pak Kajin to just come in here for the last word in terms of what sort of support would you like to receive or see coming from the likes of ICIEC and BIGA. Pak Zafril has already expanded his thoughts. Would you like to add to that discussion?
Yeah, sure. Thanks. I think in terms of capacity building, I do agree with RCA Indonesia that there's a huge capacity out there. I think the key challenge, and I think other ECAs could actually agree with me, is structuring the correct deal at the correct time with the particular bank itself. I think given the fact that we have actually discussed in terms of regulations and regulatory compliance, I think there is a way around it, but my suggestion, if we are looking into the ASEAN community as such, I think that a lot of banks, whether it could be in Indonesia or Malaysia, needs to have certain engagement with the central bank and perhaps to push this forward, not collateral as the main factor, but credit insurance could be something of a quick solution moving forward. That would be my comment. Thanks.
Thank you, gentlemen. So I believe we have some time for Q&A. So I'd like to throw the floor open. You know the routine. If you'd be kind enough to please state your name, the organization you represent, and please follow that up with a short question. We would appreciate that. We have 10 minutes. Yeah, we have 10 minutes. I see a gentleman on this side of the room. And if you could also perhaps just mention who you'd like to address the question to.
Pak Jafril, Pak Badrus, all friends, okay. My name is Vince Govan from Kadin, Indonesia. I was asking Ibu Nida Raza, the director of ICD, about the possibility of financing through our fishing boat. Fishing boat financing is different from motorcycle. Motorcycle is bankable. You pay 10%, everyone want to financing. If somebody is not paying, at the end, you just take it back. Fishing boat involve higher risk. But this is the policy of Indonesian Minister of Fishery, that we are, Kadin is expecting to build 10,000 fishermen boat. Would you be willing to finance? And I have someone from Danamon also, right? So now, the good news is ICD is willing to finance through any institutional, like Bank Danamon, Bank Jabar, Bank whatever, Muamalat. And ICD is willing to take the risk. If the fisherman is not paying back the installment, the risk is at ICD. The thing is this, whether our insurance company is willing to take the risk of insuring the purchase, acquisition of fishery boat. Very simple question. I would appreciate your comment. Thank you.
Would Pak Heri like to run with this?
Okay, but this is, Pak Vincent, this is outside Syariah. But we're doing in conventional, even we're not being insured, we're financing the fishing boat. But in the bigger scale and in a more structured and comprehensive, might be better to see this as a comprehensive solution. Then that's something that we could see with either maybe Askrindo or ASEI. I believe the program exists here. Safril maybe also could share, or Pak Badruzaman.
Would you like to add anything, gentlemen? Pak Badru, Pak Safril?
Well, Pak Vince is my colleague in Chamber of Commerce. Well, my answer is very straight. If Danamon is going to finance you, I'm from ACA. ACA, Asuransi Central Asia, is willing to take the risk. So we should be sitting together because we've got to assess the risk, of course, and how much the premiums that you like to pay to us. Thank you.
I'm sure that's about as direct an answer you can get. Thank you.
Yeah.
Is there? Yes, Pak Badru.
Vincent is my colleague also. Vincent already mentioned about ICD. In the last day, we will signing with ICIEC and ITFC.
Right.
And maybe we'll signing with ICD also. As long as ICD will finance, we can doing in a insurance is a fronting basis. This is the first. Secondly, in insurance there is a discussion in general insurance about how to insurance the fishing boat. This is Pak Vincent, must be a combination. As long as the insurance is issue the policy, maybe it will be easier to the bank and to the trade credit insurance to issue to back up the financing also. So it depends on the condition. ICD is okay. I can supporting is on fronting basis. In general insurance can supply. We can doing it directly. Thank you.
Thank you very much.
Sorry, just
Pak Heri.
to add in this, because I think 2 years ago we were trying to find the insurance policy that we thought exists for hull insurance in the marine cargo, but for this fishing boat is different. So maybe that's at that time was not available the policy. So hopefully now, if already available in the market, then something that we can think about.
Thank you. I think we have time for one more question, so that we can give you a complete answer. No. In that case, I bring this session to a close. I thank my fellow panelists for being present and offering their professional thoughts on the various topics that we've discussed. I hope from the perspective of the audience, it has been useful, and I'm sure you know where to find the gentleman that you find on the stage. We'll be happy to deal with you on a one-to-one basis should any needs arise. Thank you very much.
Thank you very much, Mr. Srinath Kesavan, for conducting the session. So we would like to welcome on stage. This is the very special ceremony, just like we did earlier, but I have to check it first. For the souvenirs, is it already there? Already there, okay. So we would like to welcome Mr. Kesavan to hand over all the participants of speakers to get souvenirs and expressing of appreciation. So I have to check it first. Okay. This is a very valuable moment for us. Okay, ladies, please step forward on stage. The CEO. Okay, we would like to welcome Mr. Kaisi. So Mr. Kaisi will hand it over all the souvenirs for the participants. First, Mr. Srinath Kesavan. Yes, check the souvenir first. Okay. Mr. Srinath Kesavan is handed over the... Okay, give a round of applause, ladies and gentlemen. Thank you very much for your contribution. And next, we would like to welcome Mr. Za'afril Amir. Congratulations. Yes. Again, a round of applause, ladies and gentlemen. Hopefully you're not a little bit sleepy at this hour. No problem. So we have another last session later. And also we would like to welcome Mr. Anas Bahfen. Receive a souvenir from CEO. Thank you very much. And also Mr. Rick Kuka Jin. representing. Yeah, representing Mr. Khairil M. Tamil, who cannot attend this today. Mr. Mark Wong, yes, later on. Formerly, maybe it's written Mr. Khairil M. Tamil, who will present today, but he can make it. So, our next speaker, Mark Wong. Mr. Mark Wong, thank you very much. Well, we have a supporter for Mr. Mark Wong, yeah? Big round of applause for Mr. Mark Wong. There you go. Yes, Mr. Harry Hikamanto. And last but not least, we will mention Mr. Badru Zaman on the list. No worries. Everyone shared the same happiness as we do today, sir. Thank you very much for your contribution. And then after this, we're going to do the group photo session together on stage in one frame. Mr. Harry Hikamanto, already received. On behalf of Mr. Khairil M. Tamil, thank you very much for sharing Mr. Rick Kukajin. Everyone already got their souvenir yet? Okay, then we take a picture. A group photo session together. Please gather up. Okay. Big round of applause. And please do take some picture together as a group. As a group. Yes, sir. You too, sir. You can join the group photo session. Yes. Give a best smile. And thumbs up. Won't hurt. Okay, there you go. Thank you very much. Okay, you are very welcome back to your seat. Thank you very much, ladies and gentlemen, for sharing all the knowledge and experience. And we move on to the final panel session. And the title is How Multilaterals like ICIEC can support the member countries in Asia, and how international lenders and investors can operate with ICIEC to implement large development projects in its member countries. So the moderator on duty in this session is Dr. Abdul Hakim Elwair, Director of CID IDB Group. And joining Dr. Abdul Hakim Elwair on stage are Ms. Cynthia Rusli, CEO IIGF Jakarta. Please be seated, sir. And Mr. Walid Saridin, AGM SMBC London. We would like to welcome Mr. Miles Johnston, Aeon Singapore, Singapore. And last but not least, Dr. Hashim Hussein, Head of UNIDO, Bahrain. So, ladies and gentlemen, this is the very final panel session that we are gathering today. And the stage will be set first. Also the name that representing the person. And I think Dr. Abdul Hakim is already on stage. Ah, okay. Ah, okay, I see. Closer. You can? Okay. Okay, again, I would like to mention and welcome on stage is Ms. Cynthia Rosalie, CEO IIGF Jakarta, and Mr. Walid Saridin, AGM SMBC London, Mr. Miles Johnstone, Aon Singapore, Dr. Hashim Hussein, Head UNIDO Bahrain. So we still more? Yeah, Dr. Hashim Hussein hasn't present yet?
Well, he's around somewhere in the
Yes.
complex, and he will join us in a minute. Apologies for that.
Okay.
Thank you very much.
Thank you very much.
Good afternoon, everyone. Assalamu alaikum. My name is Abdul Hakim Ilwar. I'm the director for CID. Now, if you don't pronounce CID fully, some people might think it's Central Intelligence Department. It is the Cooperation and Integration Department of the Islamic Development Bank. And it is the department that does partnership. So we don't do very much of insurance, but we do partnership of bringing different partners closer for better cooperation. Today's session that I will be facilitating will mainly focus on how the multilaterals like ICIEC can support their member countries in Asia in particular, and then how the international lenders and players in the market and investors as well can cooperate with ICIEC to implement large development projects. And we have constituted a panel member that has an example of a member country also from within the national member country, one of our key member countries, the host, Indonesia. We also have an investment bank with us to give us some experience from the investors' point of view. We have also the mediators that play the key role between insurers, lenders, and the beneficiaries from AON, that they will share with us some of this experience. So let me start in the absence of Dr. Hashim. I would like to call upon Mr. Walid Sariuddin. Walid is the Assistant General Manager of the Sumitomo Mitsui Banking Corp, which is SMBC, very well known in Asia. He's also the head of Islamic finance at the bank. And before I would give you the floor, Mr. Walid, I would like to know and share with the audiences from your own perspective as an investment bank, what is the role of a global infrastructure bank in partnering with multilateral insurers like ICIEC to basically mobilize more resources to meet increasing demands for the infrastructure development in our member countries? That would be a key focus that we would like to hear from you as an investor on that partnership with ICIEC. Please, you have the floor, Mr. Walid.
Thank you very much, Dr. Abdul Rahman, and thank you for having us on this panel, on this occasion for the 41st annual meeting of the IDB. The question you asked me is obviously a very pertinent question. All day today we have been listening to various esteemed speakers, and if we were to just draw one conclusion or one highlight, is it's all about the creation of a momentum, or the creation or the enabling of the flow of funds in various forms of capital mix in order to support the development of various countries. In this case, we're talking about mainly about the IDB group member states. So clearly your question goes in that same direction. And as SMBC is, perhaps for those who know a little bit less about SMBC, it's a global Japanese bank very much involved in infrastructure financing on a global basis. And we do have a specific focus on many member states of the IDB, and as it were also the ICIEC countries. So perhaps I could have my presentation to just and I'm not sure if I'll be able to operate it from here, or I'll just give you a sign to flick through them.
They can do it. You just go on and you follow, you just tell next and then they should...
Yeah, I mean, let's just immediately go to the next slide, if possible. If it's, yeah, I mean, again, SMBC as a financial group, as I just mentioned, is a very large banking organization with asset value of close to $1.3 trillion and over 23,000 employees on a global level, and a capital of almost, I believe, close to $15 billion, with very large footprint. Myself, specifically, I sit in the next slide, please. I sit in SMBC Europe, which is a UK bank fully owned by SMBC. It's SMBC Europe. Again, it's a sizable operation covering the EMEA region, i.e., Europe, Middle East, and Africa. And by the way, probably covering the majority of the IDB countries under this coverage. And we have, out of London, mainly been dealing with the IDB group and the ICIEC, although our Dubai office is involved as well. Just to the next slide, if you don't mind, just to show the global footprint. SMBC is a truly global bank with a footprint over the 5 different continents, and as I said, very active in project finance. Moving on with a specific focus on the IDB group countries, if we go to the next slide, just to mention that we have, talking about our expertise in project finance, we have been ranked 2nd bank in project finance on a global and in EMEA basis by Project Finance International, which is quite a prestigious accolade to receive. Going forward, just like to quickly talk about our presence in the IDB member states. Talking about infrastructure specifically, we focus on energy, on power, on water, on transport as well, and on social infrastructure, whether it's education or healthcare, more specifically. The general pattern or the general method we follow in executing or providing financing into infrastructure projects is most of the time following a more or less typical project finance structure, which is well established on a best market practice. That's the main focus. And going to the next slide, please. I'll try here to, probably in direct response to what Dr. Abdul Rahman was asking, try to give an illustration, probably a practical illustration, of how the products offered by an institution like ICIEC can indeed provide a bank like ourselves an enabling tool in order to access the financing of certain projects in certain member states, without which our access would have been much more difficult, if possible at all. So that's the precise way of trying to illustrate how practically our involvement with ICIEC is bearing fruits, and we look forward to do much more with them. So without getting all technical, I'll just say that typically we look at a project finance opportunity, we analyze it according to very well-established standards, and probably a lot of international banks do the same. We look at the project economics, we look at the sponsor of the project, which we'd like it to be a well-established client of ours, customer of ours. We look at the methods used for the financing, how standard they are, how well understandable and how robust they are, financial modeling, other impacts of other economic parameters like inflations and what have you. Once we form a conclusion that this particular project is a very good project, it does follow market practice, it has been stressed out and is still yielding very good performance as far as we're concerned under our risk management policies and our marketing policies to start with, we may still face a very specific issue, if I may call it so, in many cases, in some countries, which happen also to be member states of ICIEC and the IDB group, there could be a specific element like, for example, long-term risk. We could determine that the project works very well, we are very happy with it, but for a variety of reasons, ourselves and many other international organizations are still not able in some cases to take long-term risk in a certain country. And these infrastructure projects, by definition, do call or do require quite a long tenor for them to make sense for the private investors who's coming into them. So that's pretty much by definition. So in order to specifically, if you can move to the next slides, please. In order to specifically address that specific issue, we have recourse to our partnership with ICIEC, for example. And here it's very important for us to highlight that, based on what I said, we don't look to just shift a risk to a third party. We are specifically looking at filling a gap, if you want, or just specifically bringing a specific solution for a missing element, which is a constraint for us. And that's why we found out over the years, for 5 years at least now, that ICIEC does indeed provide products that are very satisfactory for us in order to optimize the situation and to arrive to a point where we can actually consider that particular asset or transaction at this stage bankable by us. So, and this is what I'm trying to say, this is the illustration of how a big organization like ourselves can work with ICIEC to optimize the financing condition and to be able to move into deploying funds into a particular asset, a particular project at this stage. Why ICIEC? Because ICIEC is a well-rated, it's a AA-rated entity, it's part of the IDB group, enjoying strong support from the IDB itself and other member states, which are also shareholders. ICIEC is well established in the insurance industry. It provides a breadth of products which are all of value added for a user or an insured, technically speaking, like a potential insured, like ourselves. And very importantly, we have established a relationship through which we can arrive, when we're working on a particular transaction, we can arrive at a common view of the risk of a project with the insurer, in this case ICIEC. This is very important. This is an open relationship. It allows us to have flexibility on how we ultimately have an insurance policy that is very essential for us to close the transaction. And clearly, on the ICIEC side, we'd like always to think that it also provides them with a business opportunity, and more importantly, with a case through which they further fulfill their developmental mandate, which is the same for the IDB group altogether. So we'd like to think that we do create a win-win situation by doing this. We create a good asset for ourselves, and ICIEC follows through the execution of its mandate in this case. Can we go to the next slide very quickly, please? I did cover this. Next slide. Just to close this presentation with an illustration of a case study, something we've done with ICIEC around coming to 18 months, almost a year and a half now, end of December of 2014. The case is in the Republic of Turkey, an important member state of the IDB group and definitely of ICIEC. The Republic of Turkey has embarked on a very ambitious plan to modernize its healthcare sector, a very essential utility for improving the standard of living for the Turkish people. It's a very ambitious program, as I said. It's around $5 billion and it counts a large number of projects. It's effectively creating PPP, hospital utility assets that will improve the healthcare provision in Turkey. A particular case, which was one of the first cases, and definitely the first deal that closed with an international syndication, was the case of the Adana, which is a city in the southeast or south-central east of Turkey. Large complex, around over 1,500 beds, so that's quite large in the world of hospitals. And it's specifically our partnership with ICIEC, which allowed us to go through our traditional analysis of a project, in this case the PPP healthcare project, with well-respected customers of the bank who were sponsors of this project, tick those boxes that are essential, and then speak with ICIEC, or from the beginning, as a matter of fact, speak with ICIEC about the fact that we would like assistance in riding the long term. In this year, it's public information. I can tell you it's a 15-year tenor in the Republic of Turkey. So specifically, the product offered by ICIEC, which is a non-honoring of sovereign obligation, and Ms. Honda of MIGA a couple of hours ago was referring under their list to a very similar product, was the product we were looking for in order to bridge that gap, like I was saying, and be able to conclude that deal. That deal was a symbolic deal, which was the very first one. Since then, 18 months ago, since then, there were 3 other transactions closed. We went on to do another transaction very similar, slightly smaller, with ICIEC 6 or 7 months later in Turkey as well. The sector is moving very fast now. The development and the execution of these projects is underway. That particular transaction also was very well received in the market. It won 2 very prestigious awards, Best PPP in Europe, I think, as well as another award by the Partnership Bulletin, which is, again, very highly regarded in the market. So, in conclusion, the main takeaway from what I'm trying to communicate here is that, indeed, I think we have brought some proof to the system, so to speak, that a partnership between an international infrastructure financing bank and the ICIEC can indeed deliver projects in some member states. ICIEC can be the facilitator of the flow of funds into its member states for the development of badly needed, in some cases, or just required infrastructure projects. We're very proud of this association. Like I said, we do actually have a memorandum of understanding with ICIEC that we signed around 2 years ago, which is, we'd like to think, is bearing fruits, and we look forward to do more of such transactions, whether in the EMEA region and also, since we're hosted by the Republic of Indonesia today, definitely we do look forward to do some activities here in Indonesia, as there are several opportunities, and we are, in all cases, very active in this market. So that's my message, so to speak. Partnership with ICIEC is definitely a facilitator for flow of funds into member states.
Thank you very much, Brother Walid. That is a very good perspective from an SMBC point of view of an investor in infrastructure as a bank, and the role of multilateral insurances to partner together and to mobilizing more resources. We have our other guest, Dr. Hashim Hussein from UNIDO. He apologized for late joining. I think we started a bit earlier than scheduled, but we know you had other commitments with the Director General of UNIDO. So Hashim Hussein is the head of the UNIDO's Investment and Technology Promotion Office in the Arab Region Center for Entrepreneurship and Investment Training. I think, Dr. Hashim, in today's era of down economies, very highly competing and struggling to survive economies, and sustain trends of economies today, with the challenges, mainly challenging gaps created regarding the resources needed to realize the newly adopted 17 SDGs. With UNIDO being a key UN agency specialized in industrial development, we wanted to know how can UNIDO contribute to the process of unlocking global market financial resources that are required by the beneficiaries who will benefit the users of the projects, the member countries, the investors, and the insurers all together, and how can UNIDO contribute to partner all these key players together in order to materialize or realize some of their ambitions globally. So you are welcome, and you have the floor to share with us your views. Thank you. You need to put the mic on.
I'm apologizing that I came late, and I apologize because I have to leave again. because my Director General is, Dr. Lee Yong, he's here to support the Islamic nations, and we're meeting with a number of financial ministers, and I'm the head of his delegation. So I'm taking notes on what we can do, for most of our member states of the Islamic Development Bank. Thank you for the question. I think this is a quite important question. Today, in the earlier session, I was talking about that UNIDO is entitled with SDG 9. It is infrastructure, industry, and innovation. UNIDO have been working and lobbying for member states, financial institutions to lobby and to vote for that, and successfully we managed to bring back industrialization to be part of the UN SDGs. Because there is a direct link between infrastructure and industry, and between industry and infrastructure. But always the gap which we have to look into is innovation and entrepreneurship. Because without the human factor, and unleashing the entrepreneurship and innovation, we cannot manage to bring down what we call poverty alleviation, economic diversification, and prosperity for our nations. So one of the most important agenda of UNIDO since early times, this was one of the reasons and the wisdom of UNIDO to establish an investment and technology promotion office in the Kingdom of Bahrain to be part of the UNIDO investment offices. UNIDO has a unique program within the UN agencies for over the last 30 years, that we have a network of offices, mainly in industrialized countries. Those offices are mainly engaged in investment and technology promotion. We have an office in Tokyo, an office in Seoul, an office in Beijing and Shanghai, an office in Moscow, an office in Brazil, an office in Italy. And the only office in a developing country you can say per se is in Bahrain. But looking into the financial resources and the financial institutions, Bahrain as the financial hub for the Middle East, the wisdom was to open this office in 1996. And this office mainly, just exactly into your question, that the office have been working on how to develop program for access to finance, how to make financial institutions to work for industrial development, how financial institutions can work with entrepreneurs, how financial institutions can work on R&Ds, how to commercialize technologies, how to invest in infrastructure. So nowadays we have been realizing that the non-financial support services, they're a key element for access to finance. This is why we are developing now, or we managed to finalize a common strategy between us and ITAP, of the ICIEC. And we're very proud that we have been working with ICIEC for a long time, and we were pioneer in developing the ITAP program a few years back. And we have several programs. We're going to implement it with ITAP and BADIA, for example, in Africa, but also we're discussing several programs in Asia, mainly for Indonesia. We are looking to develop, and this is why I was late and I have to run back again. And we're working in developing an investment promotion program for Indonesia, how we mobilize finance and investment from the Gulf countries to Indonesia. We're also going to work with a number of countries in Central Asia for access to finance, and this is with the Istanbul Chamber, hopefully, and again with ICIEC. So the question of access to finance, we use the term access to finance, and we don't use the term financing, because access to finance is the issue when I come to development of small and medium enterprises. So we have to bring the know-how, we have to bring the techniques, we have to bring the infrastructure, we have to bring the ready entrepreneurs, and very important, we have to bring the technology tie-up, because most of the Islamic countries, they're technology seekers and they're not technology providers. So I don't know if this satisfies you, or I can add more and more, but I just wanted for the audience here, we are working, and I'm sure with the new leadership of ICIEC, we have a very pride ideas how we can stimulate to develop the domestic investment and to mobilize foreign direct investment in the Islamic countries, inshallah.
Thank you very much, Dr. Hashim. That is quite a brief submission of UNIDO's role in allowing beneficiaries and also insurers accessing to finance in order to meet their demand for industrial development, and will allow us to come back to you with one question. I know you seem to have.
If you might permit me, I have to leave because they're waiting for me. I'm sorry, but we're serving so many nations, and I'm very happy that we're having our Director General, Dr. Lee Yong. He's supporting our countries, but I can be contacted through ICIEC. I'm a team of ICIEC. I'm a UNIDO man, but I'm part of the advisory services of ICIEC. But any requests regarding entrepreneurship, regarding technology tie-up, regarding incubation, investment promotion programs, those are the programs we're developing with ICIEC.
Your disruption of the program of having to leave or forced to leave would allow me to disrupt the process of running the session and make sure that you get your grilling before you go.
If you don't permit me, I can't do that.
We want to make sure that you get your part or cake of the grilling before you leave. So I would like to see if any of the panel members, at least I would allow one, and one of the audiences to have a direct question to Dr. Hashim Hussein from UNIDO before we allow him. That's basically the ticket for you to leave. Provided you provide the satisfactory answer. I know. You see, we took them by surprise, and they were not ready and prepared.
Well, if there is any questions, my brother, my colleague, Mr. Osama Al-Kaishi is here.
No, you cannot delegate this.
You can talk on my behalf later on.
This is a non-delegatable
okay,
duties.
I'm here. I will be waiting.
It's
okay,
a personal
no
accountability. Okay. Well, unless I don't see... Oh, that's... Okay, let us. I think we can take the risk of making sure that we communicate any questions through ICIEC Secretariat, of course, from any of the audiences or panels to Brother Hashim, and also secure the answer back to the asking person. So that's at least a risk that we can. ICIEC is used to taking risks, and they can take this risk with the assurance of Hashim.
Thank you very much for the teamwork of my,
With
my Muslim
that,
brothers.
you got
so
your,
I know that you will cover my back, but I'm assuring you I'm doing it for a good cause. I'm trying to help other countries, inshallah.
Appreciated and understood. With that, you got your clearance to leave. I wish you all the best, and hope to see you around before you leave this place. Now, there will be something at the end of the session which you will not get until you answer all the list of questions. Right. Well, thank you, Dr. Hashim UNIDO, and we go back to the business of the insurers industry that we have. We've listened to Brother Walid from the SMBC on the role of the investors. We listened to Dr. Hashim on the role of the multilateral agency from the UN perspective. We have with us today also Mr. Miles Johnston. He is the head of structured credit and political risk from AUN in Singapore. I wanted to Miles to see as a provider of advisory services to the key players in the market of insurance and beneficiaries. How do you think that, from your perspective, partnership with multilateral insurers and investment insurers such as ICIEC will assist beneficiaries and end users to have more access to financial resources without, and this is a very specific attractive condition, without what I say anymore, if I'm right, and you would forgive my naive question if it doesn't make sense, anymore the need for guarantees by finance ministries.
Thank you, Doc. Hello?
Yeah, please.
Thank you, Dr. Anwar. In short, it's been touched upon already slightly by Walid in his excellent presentation. It's very important. I think the strength of a strong AAA credit rating and the ability to issue guarantees for as long as 20 years galvanizes sources of financing for massive infrastructure projects that are not getting any smaller or simpler. So we increasingly work with multilaterals such as MEGA, ICIEC, and for African projects, ATI, and we form insurance syndications to spread the risk amongst those institutions, as well as up to 40 members of the private insurance market globally. And this helps us build capacity, insurance capacity, to underpin the lending that's going on, which, as I say, is for projects that keep growing, getting longer and more complex. I hope that answers the question.
Okay. Can you please tell us more of how ON can contribute to the whole process and lubricate and facilitate this process between the key players, from the lenders to the beneficiaries and the insurance?
Sure. So just taking a quick step back, Aon PLC is the leading global provider of risk management, insurance and reinsurance broking, and human resource solutions. In terms of our global reach, we have 500 offices, 66,000 employees, and they are based in 150 countries. And this helps us service the needs of our multinational clients, as well as our regional and local clients, and deliver them bespoke, specialist insurance risk solutions. In the field of infrastructure finance, my team consists, in fact, I'm the only non-ex-banker on my team, a traditional insurance broker by background, but my team consists of individuals who have spent up to a combined 30 or 40 years in international banks and traders, and who have also been commercial insurers. And that mix of skills is very important. We're focused on transaction-based emerging market credit and political risk. We provide advice, structuring and execution of insurance risk solutions for international commercial lenders such as SMBC, for project investors, project sponsors, and also occasionally for export credit agencies themselves if they're looking for reinsurance protection. The insurance carriers who actually take the risk, I mentioned already, the multilaterals, the Lloyd's market, who are represented now, over half the market is represented in Singapore, so we don't have to go back to London, where the traditional hub of expertise, underwriting expertise, was based. We also work with international insurance companies who are usually rated at least A+ by S&P, Moody's and Fitch. We're very proud of our relationship with ICIEC. I know for a fact that some of our mutual clients have been very pleased with the structured insurance syndications that we've been able to put together, and we've even won awards together. So I hope that we will continue to enjoy a long and fruitful relationship together. The reason I mention that is because one such occasion for a regional IPP project,